3 weeks ago, I went blind, so I have multiple pairs of reading glasses. If any of the rest of you are of the age, you may borrow them. Who's ready to have some fun? Who had fun last night? Who's missing this morning? I'd like their names up here so I can call them out later. I'm not going to let them get away with it. So, who is here at SampleCon for the very first time? Wow, cool. Welcome. Since there's so many new people, I'm going to give you a little history of SampleCon. It'll take like 3 minutes. So you know how we got here and kind of what our mission is for today. So this is the 7th SampleCon in the 6th year. So does anybody know how it could be the 7th SampleCon in the 6th year? Let's see who's on their toes here. Anyone? What? No leap year? Come on, you guys are researchers. You look like you know. 2 in 1 year. Give this girl a prize. I'm going to give you a prize. Here you go. Welcome to Texas. I expect you to wear this throughout the event. Congratulations. I like to give away prizes. I'm going to be up here for the next day and a half. I'm a fairly high maintenance individual. So here are some of my favorite supplies. We have Immune, if you would like some immune booster. Some Himalayan sea salt. This is very good to put on your food. We have some chapstick, which I'd prefer you don't use. I don't want to share it. I have a blend of essential oils, Young Living, if you would like them. They are Bravery. I know some of you are nervous to speak. There's lavender to relax some of you. And then we also have, that one's a Valor, Harmony. So if things get a little heated up here, I will douse you with some oil. Please do not touch me unless you have sanitizer on. This is some sleep spray. If I don't like what you're saying, I'm going to put it on you. Maybe you'll fall asleep. And then we've got some supplements, okay? So we've got magnesium, immune, probiotic, keep your system flowing, and some lozenges. I have a candle here if we'd like to get in the mood later. I was told earlier by the hotel I was not allowed to light them, but they did give me matches. A little bit confusing. And we have up here a book. If you would like to sign it when you come up here, this is Plans for World Domination. Obviously, the world is going to be dominated by someone in this room, right? Sample is definitely a world dominator. Okay. So, with that said, 7 SampleCon, 6 year, 1 prize given. We've got some other prizes. Some of them are cooler than others. So, tons of new faces. We hope to see you back next year. Glad that you joined us. So this whole thing started in 2013. Does anyone here know Patrick Comer? Anyone? Anyone here like Patrick Comer? Difference. I like Patrick Comer. Okay. So this event was started by Patrick. So if you love it, give him credit. If you don't like it, blame him. Some of the rest of us had something to do with it. And he started this as a user conference. For those of you who do not know, Patrick has this platform and does some stuff. And he invited people to come to an event to learn how to use his tool, right? And then in 2014, he had yet to raise, 60 million or whatever just happened. So he came to some of us and was like, hey, I need some money. Do you guys want to do this SampleCon thing with me? I'm assuming that I got invited to participate because he'd gone through the rest of the list. But he did call me. I'd really like to have you. It'll be fun. We need to give a check and get this thing going. And so he was able. There's slides, but I didn't look at them in advance. Here we go. Here it is. It's going with my story. This is perfect. So Patrick bamboozled us into joining him on this mission. He felt very passionately that Our industry did not do a good job focusing on sample. Typical conferences may have 1 or 2 sessions related to sample. They all kind of said the same thing, and there was no organization that was really committed and dedicated to next generation sample and moving things forward. And he's like, hey, I'm going to take this on, and will you guys do this with me? And we were like, sure, that sounds fun. And so we gave our money, and then we were like, we don't know how to like put on a conference. Like, I don't know how, do you know how to do that? Did you know how to do that? I don't know how to do that, right? Yeah, we have no idea what we were doing, right? So we're like, if you don't know what you're doing, just book the Ritz, right? Everything will be all right. So we have our conference at the Ritz with the founding members. Will the founding members please stand up? Bonnie, Patrick, Andy, Mende, and myself. Here they are, around the room. You can share the blame, if you don't like it, with them. And then it was like, hey, people were like, hey, is this like, what kind of event is this, and who is this, and how do we get more people? So we decided to add some committee members. It's not always a good idea, you guys. So we had some committee members, right? And so we were like, cool, we have some help, but now there's like 9 people. We can't all be bossy. Not everybody found me funny. I was like, you're out. And the next year, we then invited some additional board members, right? Because we're like, hey, like we're smart and cool and whatever, but maybe we're not that smart or that cool. Like maybe some other people should have some input here. So we then invited Seema and Jake, Seema Vasa and Jake Wolf, if you'd stand up. We invited them to join us. We needed their money, their ideas, I mean, and that brought us to, I don't know where, because I'm not following these note cards at all. Oh, I can't believe you guys put me up here. Okay, so last year, our theme was the great, what was our theme? The great sample debate. There was no debating. I was really pissed. So this year, stuff needs to go down up here, right? Because I know that you people are sitting in your office, right? And you read your little like Research Daily News and you're like, that's bullshit, right? Or so-and-so's blog and you're like, who do you think they are that they can say that, right? And there's all of these new things, right? Every day I'm getting these this is a new thing in research, right? Opinion pieces, right? Everybody's zinging out these opinion pieces and you guys are all sitting there and you're like, blah, 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 blah. So I want to hear that up here. No hard feelings. I mean, there might be, but that's too bad for them. I'll give them some oil, calm them down. So our goal here today is to have fun. We want to have an open and collaborative conversation, okay? We can't have an open, collaborative conversation if everybody agrees and then goes back in the corner and is like, that was stupid, right? It doesn't work like that. And then this year, we needed more money. So we added, where's my slides? We added 2 new, yeah, here we go. We added 2 new board members, right? Is that right? We added 2 new, right? So we added Nancy. Where's Nancy? Nancy, who I've already scared to death and told her she needs to, she's very nervous. There's Nancy. Nancy, did you say that you wanted to tell a joke? Yeah. Nancy likes to be planned, and I am the wrong person for that. But we're friends. We're friends. We're going to have fun today. And then Tom joined us. Tom, where are you? Aha. So Tom joined us. The founding members are company related. So now Tom is with us. So I hope they had fun. Now, big change for next year. Where's Rob? Oh, he's sitting right in front of me. And then last, but not, Rob, you get a prize. I'm sorry, Rob. Come here. Can I have a hug? How do I forget you?
I've easily forgotten.
I know. Oh. Welcome, Rob. Rob just recently wrote a blog post. Does anyone want to talk about it?
Probably.
Yeah, okay. Sit down.
Did we pay the bill?
I don't know. Did they pay the bill? Who paid the bill? I don't know. So 2019, I have no idea what's going to go on. They kicked me off the board, I swear to God. So this is my last year. I am rolling off this board because Patrick said, this is your date, you got to go. And so whatever happens here, I don't care. This is it. You guys have fun next year. I don't know what's going to happen. We'll see. Thanks, Patrick. It's been real. So if you don't like me, you don't have to ever see me again. No, I'll be back next year. They'll be like, oh, you have to sponsor. That would be weird if you didn't sponsor. Like, you've been in this whole thing, and you're going to give us money. We need your money still, but you can't be part of our group. Cool. Okay, so now I'm going to launch into like equal to like a pharmaceutical commercial, right? Where they're like, hey, this medicine is great. And then there's like all these other things. And so I'm going to tell you about all our sponsors, okay? Are you ready? Is everybody ready? Whoever I miss, sorry. Is this sponsors? No, this is, okay, before I get to sponsors, if you need to get onto the World Wide Web, there's some Wi-Fi. And if you want to know what's going on in this conference, because Rachel wanted to go paperless, which I hate because I need a lot of paper, I argued, I lost. See, they're kicking me off. They're like, no, who cares what she thinks? It's all on the app, so get it. And if you don't know how to do it, there's those cute little table tent tabs things that you like would have like a happy hour list on them on your table. So sponsors, I'm not going to say them all at the same time, because there's a lot, but I want to make sure that we recognize them because this is a nonprofit event. We do not make any money, hence why people keep having to ask us for money. And our sponsors are what makes it possible for you guys to have potatoes and sausage for breakfast. So last night, who had fun? Awesome. Rattle In, barbecue was fantastic. That was Tango card. Tango, can you please stand up? Oh, look, this is going in order. Nobody's here. They partied too hard. Oh, where? I can't see. I have no lights. Okay, hi. Thank you so much. We had fun. We got kicked out at the end. They were like, you have to leave. Everybody's kicking me out of everywhere. This is a theme. And then in order to get to the Rattle-In, who participated in the scavenger hunt? Did you guys have fun? I heard it was awesome. Okay. Who thinks that they had the most fun? Who's excited to get a prize? There's good prizes. Like, you guys are going to be stoked. I'm not going to tell you what they are, but let's thank EMI for that. Can you guys stand up? EMI. I can't. Oh, there we are. Thank you. This is very important. I hope you guys are all paying attention to who these people are because it's going to matter. I mean, they matter in general, but let's thank Lucid, my friends at Lucid, for the application and going paperless and saving trees. Lucid, would you stand up? Hello. And during the break, you have the opportunity to get a professional headshot. So I'm going to give you a little bit of advice. If you have a LinkedIn picture with like your kid cut out of it, or like your ex cut out of it, or you're drinking a beer, or like whatever, like just get it together, okay? Like, I'm all about having fun and being foolish as can be, but just get a normal fucking LinkedIn picture, okay? Virtual incentives, people. I hate having my picture taken. Okay, and then this is for later, I think, right? Am I done for right now? Or I'm supposed to keep going? Okay, I told you, it is like pharmaceutical commercial, right? Okay, and then we're gonna have a Shark Tank event. Has anyone seen the show Shark Tank? Nobody's seen it? You guys are anti-NBC. Is it on NBC? I don't even know. So we have some great ideas, or I don't know if they're great ideas, some ideas anyway, and people are gonna present, and then we have some phenomenal judges who are going to tear them apart, challenge their ideas, and they're gonna pick a winner, and the winner is gonna get $500. So we were really nervous to move from where have we been? New Orleans, right, to Austin, because it's a whole different thing to like plan an event in a different city where you don't have anybody that has a home base. So we're just going to give away a lot of stuff. And then you'll like it and you'll come back. Tonight, what day is it? Thursday. Yes, tonight, who's going to play poker? Ooh, that's going to be a good crowd. Okay, so my friends at Prodege, stand up. Mendy, I can see you, like right there in front of me. Yes, okay. They are going to put on a phenomenal event. If you have not ever been, you should come. If you don't play poker, you should still come. If you would like any type of social media blackmail, you should come with your camera because it gets a little wild. Okay, and those are my morning sponsors, right? Am I done with that? Good. I'm done. If I missed you, I will make it up to you, and I'll give you a bandana. Okay, so, so my name is Jacqueline. Somewhat presumptuous of me not to introduce myself. You can just call me Jax. If you've known me for a while, you know I have a head injury. This is the true, absolute true story. Hey, Christian. Is Christian here? Did you get your badge? Good stuff, Christian. Christian said last night, what happened to you about my arm? And then he said, you probably deserved it. Right? Then when I was like, dude, I was in a car accident with my whole family, he's like, oh yeah, I feel like an asshole. I was like, told you you were going to feel like an asshole. But anyways, so I forget what I'm doing. I have no responsibility for what I say. I don't mean it. It's just the way it goes. So I apologize to whoever I made angry last night, and I preemptively apologize for anyone I offend from here on out. If you read my blog, you know I just don't care. Okay, highlights. Do I have a time, a countdown or something? I feel like I've been up here for like 2 hours. Okay, thank God. A couple of highlights, okay? The most important things for today. We have a break at 11 o'clock. Then we have lunch at noon. Then we have drinks at 4:30. And then we play poker at 8:30. Do not miss any of those events. There's like some other stuff that happens up here in between. That's when you check your email, go have a meeting, go to the bathroom, but do not miss the food. There's also some snacks. I get very hungry. I'm on a keto diet because it's good for your brain. This is true. If you know anyone with a brain injury, they should be on a keto diet because it's good for your brain. So if you're hungry, I've got some like nuts and some cheese chips and things, jerky, help yourself. And lastly, I hope you were all paying attention to that big, long thing about these sponsors, because you may have noticed outside the step and repeat. Does anyone know what a step and repeat is? Because I had no idea. I was like, what is a step and repeat? It's that sign with all the logos on it that looks like you're at the red carpet, right? So here is another contest, and you are going to win, I forget, but oh my gosh, a free conference registration. By the way, I heard they're doubling the price next year. I don't know, I have nothing to do with it because I got kicked off. But at any rate, someone here will win a free conference registration that's worth like, how much does it cost to come here? Like, however, $1,200. So this is worth it, right? If you want a free registration. You need to get your picture taken with a sponsor. Remember all those people who stood up and they were like, hi, I'm really embarrassed right now? Grab one of those people, get your picture, put it on social media, at their company, at SampleCon, you get an entry. If you manage to get a picture with every single one of the sponsors, something great will happen. Okay, finally, because I gotta go, I have 1 minute. That was like 3 minutes ago. Please be honest, open, vulnerable. Like, we're just talking about sample here, right? So if somebody disagrees, it's okay. It's not personal, right? We have different opinions. I want to see different opinions. If people aren't participating, I totally will call on you. I might call you by the wrong name, but I'll call on you. So if I point at you and I'm like, Jim, get up here, just come, just humor me. And then later you can be like, hi, my name's really Kevin. And that's fine. I don't care. So who's ready to get started? All right. So let's talk about money. We're going to talk about money. Show me the money, right? And our first session is State of the Industry. the investor's perspective, and I'd like to call Rolf Swinton from IIEX Accelerator to the stage. Please.
No, we're good. Oh, well, first, I think I didn't realize we were going to have a stand-up routine this morning. So first, I think we had a big round of Jackie for a super warm-up for the morning. All right, there we go. Excellent. That's a good prize. We'll need this one. All right, I have, there's 4 empty stools here I need to fill up here. So if I can have Simi, John, Sanjay, and Ted come up and join me, please. Because otherwise it'd be much more interesting. Much less. What did I say? Sorry. Oh, good. I like it. We should run now. For editorial on each other, we should all borrow the cards.
It's a high chair.
All right. This is the investor panel. What we have here is an illustrious group of folks from across who are investing in the industry. I'm going to give a chance to everyone to introduce themselves and give their perspectives. Quick format. We have about 40 minutes for the session. I'm going to run questions for the group for about 20 minutes. And then I've been given explicit instructions that there are lots of people with burning questions out there. So make sure we open up the floor for discussion. Just for a quick background, my name is Rolf Swinton. I've been an entrepreneur for a long time, starting up businesses in the sector, early place in mobile research called Lumi Mobile, and then a subsequent business called Reality Mine. And I have had the opportunity of taking investment from venture capitalists, from corporate investors, from private equity guys over the years, so I've had to tangle with these different kinds of folks in different ways. It's with great pleasure that I'll have the panel go down and introduce everyone.
I'm Sanjay Chad. I'm a partner at Petsky Prunier. We're a middle market investment bank advising companies in the media, information, and technology industries.
I'm Ted Waz. I'm a Harvard postgraduate fellow, and I also am vice chairman of the Axel 360 group and OPITA Global, and we work with sovereign wealth funds, presidents and ministers of countries, and the 50 largest family offices for investment. We serve consultative services across market research, homeland defense, security, and healthcare.
I'm Seema Vasa. I'm one of the co-founders of Paradigm Sample and also CEO of Infinity Squared Ventures, which relatively new into the space, essentially advises, invests, and tries to help accelerate companies in the market research space.
Hi, I'm John Caden, president of Sopris Capital. We are a VC firm based in New York. Kind of on the earlier stage of things, we like to post-seed, kind of Series A investments for full disclosure. I'm an early investor in Lucid. I still sit on the board of Lucid and actually have talked to many of the companies who are here today. So interested in the space and have actually made some real investments in the space.
Superb. And just by way of explaining my title too, under my name now is IAI Accelerator. Just to explain that, in partnership with IEX, the conference series, and Green Book, we're actually launching a new accelerator program this year, which is investing in very early stage companies. So this June, we'll be making our first round of investments in about 10 companies from around the world, all focused on this sector specifically. We're talking about the early stage. We really have kind of a full spectrum of investors here. But let me ask you guys all the first question, why are you here with your wallets as such? Why do you invest in this industry? Why is this interesting to you as an investor or as an advisor to this industry?
I'm here because Patrick asked me to be here, and love to support Patrick. But no, in reality, we're not an investor. We advise companies around mergers and acquisitions and raising capital. We actually helped Lucid in their last round, and have worked with John on multiple occasions. But for us, we cover probably 120 subsegments of the world across the media, information, and technology and marketing industries. And this sector itself is extremely dynamic for a lot of reasons. One, it hasn't been disrupted in many years, and I think this conference is actually an example of some of the disruption that's going on in the industry. Industries that are being disrupted have lots of opportunities for dislocation, which yields potentially very good investments as well as acquisition opportunities. And then I would also say an underlying theme of what we focus on is very much data and technology and the combination thereof. And I think that there's lots of interesting business models that are going on in the market research space where people are not just taking snapshots of data and passing them on, but they're actually building their own databases. They're utilizing technologies to make an industry that in many ways historically was very archaic, much more efficient. And so for us, that's a very interesting place to be. And I think there's been a resurgence of growth, and growth sectors of the economy are always a good place to be.
Good. That's a good one.
Yeah, it's not like I saw it after the sample industry. I got introduced to Lucid and Patrick through a sister company of mine based in New Orleans who happened to know what was going on at the company. So really, kind of what Sanjay said is, we look for industries that are doing something dynamic. Even if the overall industry isn't growing, there are new players coming up doing something in a different way. That's what interests myself and my partners. So there's a lot of you in this room. I've talked to a lot of you. Lucid is still innovating and doing a lot of things where I'm sitting on the board and hearing a lot of these things. So that's what I look for in these companies. It's not specifically the sample industry, so maybe that's not as exciting of an answer as you wanted to hear, but I still think there is a lot going on. There's a lot of new players. There's a lot of different ways of looking at this industry and just market research in general.
For me, just growing up in the market research space, I agree with all these comments. There's a ton of change. And I don't think it's just about new players. It's also mixing new players with old players, because the old players have the relationships. They understand research. There's a lot of tech coming in, and the people that own the tech don't necessarily understand the insights and the research underneath it. So I think there's a huge opportunity to marry those two things.
Yesterday, Patrick, when he was talking about Lucid State, talked about things are muddy. And the market research space is really right now at the bottom of the barrel. I mean, when you look at investment, disruption is going to happen because the space has been lazy, been making money, and really haven't applied a lot of the basic principles. Mm-hmm. Now, Lucid is leading edge on some of this stuff, but programmatic, blockchain, AI, distributed networks, all of that right there is happening all around you. And your competitors are not just the people in this room. Mm-hmm. There's an entire group of industry. I mean, you look at the globe and you've got, $77, $80 billion in the market research space. People are asking questions and collecting answers all around you. In the consumer products and goods space, you're at $500 billion. In the healthcare space, you're over $1 trillion. In the homeland security space, you're over $1 trillion just in the United States. And all of those people are now your competitors. Mm-hmm. People with phones, people with pads, people with wearable devices. My wife's Mercedes collects more information on her car than most of you guys will do in the course of a year. And right now, there's all kinds of legislation, and Patrick mentioned GDPR yesterday, but that's only one in a whole host of areas. So as Sanjay said, the industry is ripe for disruption. And it's ripe for disruption because there's going to be calamities along the way which make incredible investment opportunities. Because there will be winners from that.
Let's dig into that a little bit more. So you mentioned, Ted, there's some of the different potential threats coming out here. What do you guys see as some of the biggest threats right now facing the industry? What are the biggest risks in investments you've made, portfolio companies you've had, companies you've advised? What do you think are the big threats, not just even now, but out 3-5 years?
That's kind of a general question. It's hard. Look, I think that you have to have good technology that creates a little bit of a moat around what you're doing. It doesn't mean you have to be the only one doing it, but you have to be doing it in a different way and provide your customers with something a little bit different, whether that means more efficient or something that's what we look for. There's something that's sustainable that you can really grow on. I mean, we get involved in companies that may even have $1 million of revenue, mm-hmm. and we want to, up to like 10. So it's kind of small companies. We want to see them grow from just say an average of 5 to maybe 50 or 100 revenue. How are they going to do that? It can't just be by luck. It's got to be they're building something sustainable. They're taking their time to do it. I mean, they're doing it fast, but they're doing it right. Then to me, that's the most important thing. It's technology. It's positioning. How are you going to position yourself in the market?
Mm-hmm. It's interesting. I actually think that one of the biggest risks is around the consumer, because everyone is competing for consumers' times in a multitude of different ways today, whether it's different screens or channels. And we've seen lots of companies, we've advised companies that have nothing to do with this sector, but they're using questions and surveys to build their own databases, right? So you've got entrants like that who are then just taking that data and those questions and then using that data not for actual market research purposes, but then to target consumers with advertising. And so when you've got that much of an influx of different channels, as well as now consumers getting questions for purposes that are not what this room is about, well, again, there's only so much time in the day, and of course there's a certain set of consumers that likely are happy to answer questions, they get rewarded for it, and those are probably the power users. But I think that the part of the risk here is that there's also a big part of the population that is just getting such an influx of questions that are unrelated to this room that you're competing for people's times in a way that's never happened before.
I actually think it's already happening too in terms of end clients using this type of information. I was talking to the Vice President of Johnson & Johnson, and he's encouraging his Global Insights team to use every source of data possible. And online research is a very small component of it. And his challenge is his team is not adopting that, but he is adamant that if they don't change now, then they're going to be obsolete in the company because everybody else in the company is getting these sources of information. So I think the risk is already here. It's just a matter of how quickly do we adapt.
Failure to connect with the evolving technology and its use is one of the biggest risks, but not recognizing that virtually everybody is your competitor.
Yeah.
So everybody here know Walmart? Yeah? Okay, good. So a long time ago when I was young, it was a really long time ago.
You have to say younger.
No, I don't like her. I'm the oldest person here, so it's okay. A long time ago, I went to Walmart and I met them, and they said, we have 100 terabytes of data. And I was meeting with their chief technology officer. And 100 terabytes of data is a joke today. But back then, it was the largest data set in the world outside of the NSA. And so I said, what do you use the data for? And the CTO said, what do you mean? We have 100 terabytes of data. And the CFO was standing next to him. And I said, but surely you use some of the data for behavioral insights on what your customers or suppliers are doing. And he looked at me again and said, I don't understand what you're saying. And the CFO stopped the conversation and said, excuse me for a moment. He pulled him apart, and then he said, I apologize. We have to go to another meeting. That was risk. If you have technology and you aren't quite sure how to use it, and everybody here has a mobile phone? Anybody here still using a flip phone? No? Anybody here using internet on your phone? Right. Anybody here answer survey questions on your phone? I bet you do, even if they're not from a market research company proper. Did you know there's a company called Inmar in North Carolina, and they collect all of your information from Walmart, CVS, Walgreens, Target, and all of your doctor's offices? So if you have asthma or you have diabetes and you go and you buy your groceries and you pick up your medicine, they know what your profile is. Now, they're not monetizing it, and they're not selling that data because they're terrified of it, but they have it. They're the largest collection of that data in the country. And then you have Google, who's making $100 million a day collecting active and passive data on you. They're your competitors.
I mean, the good news for Walmart is they're actually using that data now.
Yes, they are. Yeah, right. He doesn't work for the company anymore.
No, I mean, I don't work for Walmart either, but there are companies like Triad and WPP,
right,
who now owns Triad, who are utilizing that first-party data for endemic and non-endemic advertising on their sites, and that first-party data is very powerful. And
on a daily basis, first thing in the morning in every department in Walmart, they actually have a meeting and they talk about what the employees are going to use the data for positioning of their products and how they're going to interact with their customers. Thank you. That's a really important point.
Mm-hmm.
So let's just change gears for a question. For those entrepreneurs here in the room that are thinking about increasing the capital base of their business, how do you guys think about evaluating companies? What makes for a good investment? What do you look for in a company to say, yeah, that's a deal to do?
That you have a reason that you need the money and what you're going to do with it. And that you're sitting in the first 2 rows of the group here. If you're sitting in the back, I don't want to talk to you.
John? Yeah.
Growth. That's the first thing we look for. We want to make sure that there's a long runway of growth. What you're doing is important, and how it fits, all the things I said before, positioning. But if you can grow from where you are, this is what I'm looking for. So you can grow from where you are now. You're going to create value. You're going to create, increased valuation. That's what we care from a shareholder perspective. Generally, I mean, that's other things we look for. We want to be partnering with a great management team. That's important to us. It's not just about some, gimmicky product or something like that that's flashy. We're going to be living with the team for a long time, 5 to 7 years maybe. And that's very important to us. How good is the team? Is it complete? How honest and open are they? I mean, those are all very important things for us in an investment.
Yeah, I mean, I think those are obviously base things that companies look for, investment companies look for, and I can't echo enough, and this is from experience and also just talking to people, the team to me is the piece that pulls you out of every scenario possible, because nothing ever goes the way it's planned to go. And so the management team and the leadership team are critical.
The only thing I would add is that, at the end of the day, you're right. I mean, take the money if you can use it and add value. But I think your question was about, what people look for. And I think ultimately companies that actually add value in their ecosystem and to their constituents that sounds like a very basic thing, but it's actually pretty fundamental. And one of the sectors that we cover is the marketing tech and in many cases the ad tech space. And you've got, thousands of companies out there that look the same. They're basically just trading data or other things amongst each other, and they have no real end client and brand clients at the end of the day. And so from that perspective, actually adding value versus just being a lifestyle business that makes money is pretty important from an exit perspective.
So let me ask you, imagine someone's sitting down talking to you about raising capital from you or from folks you help represent. What do you tell them? What makes any of you a good investor? Why would you be smart money rather than dumb money? What can you do as an investor to really help a company beyond just providing capital?
Looking at me again. Yeah, so I think obviously the capital is the most important part, right? I mean, you're looking for the right amount of capital. There are different types of groups. We happen to be on the small end. So if you're a small company, you can't take in 20 or 30 or 40 million dollars. It just that's not going to work, right? You may not want to even give up control early on. We're very comfortable as minority investors, and we're very small. So we can invest 2 million or 5 million or in that range, and that may fit very well. So you kind of look at where this group is in stage of investment, size of investment, and see if that fits. And then the personalities, just like we look to the management group to see if it fits with us. The management team should be looking at the investment group to say, hey, these people that we can live with day in and day out. I'm not going to be looking at the operations every single day, but we're going to be asking questions from a board level. We're going to be probing around. We're going to be helpful where we can. We do have a very good network. We know a lot of people. If you're missing a whole marketing function, for example, we have lots of people who could swoop in and help, or financial function and things like that. We're never going to know as much about the industry as all you folks, and I always make that clear. But from what they should look at from us, it's a partnership. It's a long-term partnership. I talk to the Lucid folks, at least one of them every single week, if not many of them every single week. So it's a very important decision to make. But taking capital in is not right for everybody. It doesn't mean you can't survive. You can't succeed without it. I was sitting next to someone at dinner last night who we met 2 or 3 years ago, liked, and they liked us. We gave a term sheet, and he decided not to take in capital. Totally great. I'm still rooting for him. He's in this room. He knows who he is. You don't always need capital to be successful, but you take in the capital, it gives you a little bit of a fortress to go do some things and hire some people and take some risks that you may not be able to do. And you also do have that partner from the outside who could bring in different perspectives on lots of things.
Yeah, I think, I think helping the person know what they want, because I don't think everybody, I read this article and it was really right on, not everybody wants to build a rocket, right? And so knowing what you want from your investor is just as important as what the investor wants from you. And I think a lot of people want to raise a ton of money, but they don't know the wear and tear that's going to be required to take that money in. And so that to me is the most important thing. And obviously experience in the industry and the network.
We look to be able to provide insights either through our relationships, and that's one of the most important things we bring. We're not a large group. We're not hundreds of people. We're a small collective of people around the world who have very tight relationships. So when we're going to extend capital or recommend that someone extend capital through us, then we have to be positive that the relationship we're going to have is going to be productive. And if I'm going to introduce a distribution panel that's going to expose someone to a couple million or 20 million people, then I need to understand that that's a protected asset.
I don't think look, this has been very comprehensive, but I think it would be disingenuous to say that any CEO or management team should look to their investors or potential investors to help them, right? And that sounds, maybe like a negative statement, but the reality is that that's icing on the cake, right? You're getting the money, but the investors are backing the management teams, and that's the most important thing. So people have to have conviction around their own businesses if they're going to take the responsibility on of taking other people's money, because that is a responsibility. But ultimately, there are different types of investors. There's seed investors, there's early stage investors, there's growth equity investors who are, again, funding liquidity potentially, but also funding the next stage of growth in a business. And then there's private equity, which is really more later stage, where people are using some type of debt as well as equity to fund acquisitions, and in many cases are buying the majority of companies. All those things are different flavors, and those different types of investors will add different value at different stages. And look, different investors will have different skill sets. Some bigger investment funds have back office operations group. Well, they'll actually help you, with your hiring. They'll help you bring in consultants. But again, fundamentally, you and them have to be aligned around your business plan, because they're not going to run your company in the vast majority of cases unless they've got very specific operating partners. You're going to have to continue to run the business and be accountable.
The other thing I would add to that is, first-time entrepreneurs don't know what they don't know. So a lot of it seems obvious to me because I've been through it so many times. So if I can sit there and be a right-hand person to the CEO or the management team and say, hey, here are some pitfalls that you may run into by doing this or going down that road. Even with Lucid, we went out and raised another round with the help of Sanjay. I advised them, I said, just so you know, if you go down this road, it's not going to be like you talk to a couple people over lunch and you get a check written to you. It's a huge process. It's going to take management out of operations for a long time. It's going to open up everything. And they didn't understand that until they actually went through it, just as one example. But we get into companies very early, and it's okay to us that they're a little bit of a mess when we get in. And we try to, professionalize them, whatever that means. I mean, sometimes they don't have any corporate books. Sometimes they're missing people at the C-level, and they're like, oh, we don't need a CFO. We have this great bookkeeper. We try to tell them to hire up, like, do the Wayne Gretzky thing, the skate to where the puck's going to be. Hire a good CFO. You can't really, if you can't afford it, you can't afford it. But, pay a little bit more to get things done right and then grow into that. And that's kind of our philosophy.
So let's sort of think about the last stage of the company, about your involvement in companies here for our last question before we open it up. How do you guys think about this industry with respect to exits? Who are you seeing buying companies? What stages do you think people should really be thinking about for trying to find exits in the space, or at least finding liquidity as they go along the way?
Yeah, I'm happy to start. Look, I think it's different. It depends on the stage of the company, right? Because exits can mean lots of different things. I think typically speaking, when you're thinking about exits, you're thinking about at least some form of liquidity. And so, the different kind of groups out there are going to be growth equity, private equity, and strategic buyers. On the growth equity side, it's actually very interesting what's happened in the last 24 months. I think that a significant number of larger funds have actually looked at their brethren who have kind of large growth equity funds, and they're getting these massive returns, but they're also taking majority stakes. And so you've actually had a lot of launches of growth equity funds from big private equity funds, whether it's Providence Equity launching a growth equity fund, CVC Growth, Apax just launched a growth fund. So we're seeing a lot of that, and that's definitely a form of liquidity. Private equity has had a lot of interest in this sector from day one. I think that the models that the highest values come from ones that have some form of recurring revenue, where there's predictability in the model, and that yields more leverage, which yields a higher price, et cetera. But there's also, if there's 3,000 or 4,000 private equity firms, kind of in our CRM as a firm, there's probably 100 or so that probably would have a very good understanding of this space, and so you want to find the right groups there. And then on the strategic side, I would say that there's actually not a ton of deals that have happened in the traditional market research space, versus maybe some of more of the technology-enabled or software platforms. And what's happened is that, of course, as industries mature, you're seeing multiples come down a little bit. You're seeing the traditional market research agencies. You're seeing a lot of the private equity-backed businesses. You obviously saw a big merger with Research Now and SSI in the last year, which I think is a reflection of this group. A lot of the changes going on in the marketplace, where you can have sample at a faster speed, at a faster volume, is causing some of the traditional guys to think about where do we fit in the world. And then, I think that as we see more of the technology businesses in this sector, we should look for some of the bigger companies that touch data in different ways. The big data companies, even folks like Google and others, to think about exits in the sector.
Any other comments?
Yeah, just to tell you, I rarely think about exits. When I start to think about exits, I call Sanjay, say, hey, what is there one out there? So when I get involved with a company, if the pitch on like page 3 is all about how many exit partners there are for this company, as soon as we blow it out, I get a little turned off. I still listen, and it still could be great, but I don't worry about exits. I want to build the companies. It'll come if you do the right things and you build all the building blocks. So I do think about exits, of course. That's how we get paid. But
I can attest to that, because I showed John a deal at the end of last year that he said the CEO came in and talked about all the exits.
Right.
You know what deal I'm talking about.
Exactly.
And somebody else did it, and John ultimately passed. So.
Right.
And one thing I would just add, as we're setting up the IX Accelerator, we looked at all the deals over the last 5 years in this industry in terms of exits. What we did find was one thing was sort of interesting, I think specifically about our industry, is because there's not a lot of corporate players, there's not a lot of transactions like there are in other sectors. And so you have to think carefully about how much capital to raise, because there's really is a big gap between companies that are doing $10, $20, $30 million then to get to the next stage, which is in the hundreds of millions of dollars. So there's quite a big death zone. And so just in doing our own analysis, one of the things we're thinking, how do you help companies be mindful that your exits, if you get too big, could be a long, long stretch to go before you get to that next stage, which is not necessarily the same in other businesses. And so just be cognizant of that.
Well, the reality is in the marketing and advertising sector, which this segment can fall under, the vast majority of exits happen below $250 million of enterprise value. So as you get to a higher scale, 250 to 500, 500 to $1 billion, north of $1 billion, the number of exits in a given year drop dramatically. So there is actually the idea, which sounds silly, of getting too big, because ultimately, as you get too large, you can actually price out a number of your potential buyers.
Right, and even that can come to raising too much capital.
Yeah,
You're trying to be too big, but don't have a business to support that. Good. Well, we've got about 10 minutes for opening up for some questions to the group. If there's questions, or we can keep going. Anyone have burning questions for our panel?
Really? Just how lazy are you guys? Yes.
Jonathan Deitch from P2 Sample. I find it interesting to sort of listen to you talk about all of the opportunities in the industry. And if we think about where we've even come from over the last 5 years, I wonder what your perspective is on right now. Are we in a place, in our particular sub-segment, if you will, of the industry, are we in a place where you believe that the investment opportunities are increasing, are sort of staying steady? Have we kind of come off the boil a little bit? I'm just kind of curious where you think the market is right now.
Yeah, I don't know. I never look at things in a macro way like that. It's just what I do. I meet companies, so, and it could be, again, I don't invest only inside this industry. So, I mean, technology, service-enabled technology is what we like. So this is perfect inside of that umbrella. But look, I've seen, before I came here on the flight over, I looked, what companies in this space have I looked at over the last 2 years, and it was like 6 or 7 different companies, all valid companies, some of them here, and yeah, I would say it's maybe picking up even, but again, I don't count. I mean, I don't do a macro view like maybe on the banking side that they're trying to cover the whole universe and see what goes on. I just get introduced to interesting entrepreneurs, and I look at very specifically whether this company has something interesting, this company is growing, this company has a great management team and can take it to the goal line.
We look at things also from a technology perspective. So I don't necessarily just say, oh, I want to invest in a market research area. What I do say is I want to look at how is this segment using technology, and is there an opportunity to help propel forward in terms of the growth because of that use of technology. Now, if that's the case, then there are lots of new investment opportunities as people start to expand their understanding of the use of big data, which 73% of big data projects fail and are not getting the returns on investment. How they're using thick data, which is contextual data related to big data. How they're using mobile, smart devices, media, all of those blockchain. And blockchain and cryptocurrency are not the same thing. Mm-hmm. So don't make that mistake. Blockchain is like the internet that's on your phone right now. It's that foundational of a shift. And virtually every Fortune 1000 company is engaged in some activity related to blockchain. And connecting that for users is going to be important.
Yeah, like I do cover things from a macro and then specific level. I would say that, broadly speaking, technology-enabled businesses, technology companies, we're definitely at a very good market. There's more investments being made. I would say within the market research space, it's pretty steady. The nuance there is I would say that SaaS software companies in this space or SaaS business models in general are highly coveted because of the recurring nature of the revenue, because of the nature of the contracts and how they work. And I would say in this segment, in any segment broadly defined, those are businesses that are trading at the highest values and people have the most interest in.
Yeah, we took a data-driven approach on trying to find companies to invite to participate in the accelerator program. We took the grit report and we said, okay, what are all the things that people are looking for, problems they need to solve, they want technology to solve, kinds of businesses they want to solve. And we then said about scouring the world, doing searches, crunching it all. We got an initial list just this year, we just finished this up for our first wave, 2,500 companies around the world that are solving those problems that are all very early stage companies. So I think when you take that list, if you look at the group report, you look at all those things, those are just the companies we could find, and that's through people putting stuff in Crunchbase and other databases like that. There is a pile of companies doing really interesting things. Most of those companies, I would say close to 95% of them have never heard about market research. But we're reaching out to them, we're saying, hey, your product serves this industry. And they're like, oh, really? What's that? So I think that when you think about the addressable market space, it sort of goes two ways, because the guy's like, interesting, is that worth focusing? Oh, maybe, maybe not. And so there's that process, but I think there's a lot of companies that are building a lot of things which are solving the problems which people in our industry say they want solved. And I think that makes, there's a lot of opportunity there.
I was just going to say, in the sample industry itself, it does feel like, and again, this is just an opinion, there's no raw data, that we do all use technology, and it almost feels as if we're doing Me Too technology. So there's a leader in terms of building a DIY platform, and over the last 12 months, the proliferation of that has just increased tremendously. So I'd be curious, these are all technology-enabled companies, but they're similar in approach, and how do you guys view that? I'm asking you guys.
That's a good question.
I mean, they're technology enabled, they're, good management team, but the industry kind of has many of them already.
Yeah, I mean, look, from our perspective, what we look for, because, we do turn down assignments,
Yeah.
we take down everything that comes our way, and we turn down a fair amount. For us, it starts almost similarly to what you guys talked about from your perspective about why you invest in companies.
Yeah.
Like, you could have two companies that look exactly the same, have the exact same financial profile, and you've got one management team that just stands out.
Right.
You'll gravitate towards that every single day of the week. So I think management team, number one. Business models matter a lot also. There are a lot of companies that are heavy services. There's nothing wrong with that. I would say that you have to then dig deeper and say, okay, professional services businesses, they have their own inherent risks that are very different than technology-enabled businesses that have their own risks that are different than software companies.
Right.
And so we very much look at the business models, and then there's obviously key metrics that matter. Gross margins, as an example. So what are the gross margins of a company? Someone comes in and says, we are a software business, but they've got 25% gross margins. Well, that doesn't smell right. And so we look into the details around the financial profiles. But I come back to what I said before, which is adding value. And I think if someone can fundamentally talk about how they're serving their customers have a long-term need, or whatever long-term means these days, from a visibility perspective, by utilizing that business, for us, that's very meaningful.
More questions from the audience? That's a quiet group. Not enough coffee this morning yet. You take Jackie's
no entrepreneurs.
advice. So, let me ask you guys.
There's a question.
Oh,
back
one.
there. Were you looking for coffee?
Yeah, Lewis Rees from Vigor. I guess one thing we've not really spoken about this morning is around public offerings. And there's lots of different ways that I could pose a question on this, but one would be around the exits point and how you would advise entrepreneurs or sort of business owners of utilizing public offers as a way to get some sort of liquid value out of their organizations if they don't necessarily need huge amounts of capital to continue growing.
If you don't need huge amounts of capital to continue growing, why do it? You shouldn't take money just for the sake of taking money. And going public, whether it's through an IPO or an ICO, those are things that have consequences. And they have added regulations that follow them. So, there are lots of folks who, and the whole blockchain ICO, cryptocurrency area is rife with that right now, where people are writing a white paper and then trying to raise $5 million, and there are people who are insane enough to invest in that. But what's happening is that the number of lawsuits going after those people are skyrocketing. So again, the question is, do you need the money? What are you using the money for? What sort of relationships do you have with your investors? And are you servicing value? Do you have the right team?
Yeah, going public is very different, as you know, than selling your business. Right. You're now dealing with a litany of shareholders. You've got investor relations. You have significant public company costs. But I think more importantly, companies by and large need to be of a certain size and growth, because you ring the bell, you go public, and that's in the traditional way. And there are lots of other ways, and you referenced some of them, but there's other ways. There's lots of SPACs that are out there now, special purpose acquisition vehicles that are out there that you can basically back your way into a public offering. Whenever you kind of get to this height of the market, there's all these kind of nuanced ways of getting to a public offering. But once you're public and you wake up the next day, you've got to manage your business in a very different manner. It's for a quarterly basis. You come out of the gates and you miss your numbers the first quarter as a public company, you're basically going to blacklist for many years to come, and your liquidity goes down. By the way, liquidity is not really an option for management teams in a public offering, because it sends a lack of confidence to the public markets. So the investors, many times, they get out in a public offering, but the management teams actually have to sign up for a lockup period of 9, 12 months or even greater. So look, I think that the bar should always be higher for a public offering, and it should be very much about scale and growth and predictability, because business models that do not have a good amount of predictability, in my opinion, unless they're of a significant scale, should not really be going public.
Any last
Yeah, I don't look at IPOs as for exits. In fact, I just got off of a public board company. Actually, we were in it for about 10 years, 11 years, and the exit, actually, we still had to sell the company even though it was public to get, management and early shareholders to get out. So it's very difficult, a lot of regulatory costs and burden. Half of our board meetings were taken up with 10K, Q issues and things like that. But, it could lead to some excitement when you have some consumer-facing, Uber-type companies, and there might be some excitement to that, and then your users can be shareholders and Facebook and things. So that's what you look at. But most companies, it's probably not the best life cycle ending for them.
All right, so just as we wrap up, let me ask you guys one last micro question. There's someone out here who is desperate to raise capital. What's the best way to reach out to you guys to talk to you about that?
Like physically reach
Yeah,
out?
should they email you? What should they do? What should someone do? Should they just go up and
I'm an open door policy. I mean, I listen to everybody. Even if we're not investing, I always have advice or say, hey, when you get to this level of something, then we'll look at you. Or if you're not right for us, I know somebody down the block that is later stage, earlier stage, something like that. So please feel free. No problem at all.
Yeah, same philosophy.
Okay.
Yeah.
Great.
Yeah, I don't want to talk to. Now, if I'm actually going to be here for the whole conference because this conference actually intrigued me. So I'm here all the way through Friday if you want to chat with me. I am, despite this face, very approachable, and I really do enjoy conversations. Yeah.
We talk to everybody. It's not always a great mutual fit, but like John, we have an open door policy, and we love to have conversations.
Awesome. Well, great. Thanks all for sharing today.
Yeah, thank you.
Thank you.
Good. No, thanks, Andre.